Viking Therapeutics just made another big move, and Wall Street is watching closely. The stock is gaining momentum, traders are piling in, and headlines are buzzing. But let's be honest, is VKTX really the next biotech breakout? Or is this just another overhyped rally that's set to fizzle out? In this video, we're breaking down what's fueling Viking's rise, what's in their pipeline, how they stack up against the competition, and most importantly, whether VKTX is a smart buy right now or a risky bet better avoided. Welcome to Stocks Telegraph, your daily dose of smart market insights that cut through the noise. If you're looking to stay one step ahead of Wall Street, hit that like button, subscribe to the channel, and tap the bell so you never miss a move that matters. Viking Therapeutics has captured investor attention with a series of bullish catalysts. As of April 30th, 2025, VKTX is trading at $27.94, a level that reflects renewed enthusiasm around its advancing clinical pipeline and growing buzz in the biotech sector. One of the biggest drivers is the company's Phase 2 venture trial for VK2735, a dual GLP-1 GIP receptor agonist targeting obesity. The subcutaneous version showed up to 14.7% weight loss over 13 weeks, while the oral formulation delivered up to 8.2% weight reduction in just 28 days. That kind of data puts Viking in direct conversation with obesity drug giants. Fueling the rally further are buyout rumors, with Pfizer reportedly seeking cardiometabolic pipeline acquisitions. Viking is now seen as a potential takeover target. Meanwhile, its NASH candidate VK2809 is also showing strong efficacy. In the Phase 2b Voyage trial, 75% of patients achieved disease resolution without worsening fibrosis, outperforming several competitors. VKTX isn't just another small-cap biotech riding hype. This move could signal something much bigger. Viking's future hinges on two lead candidates, VK2809 and VK2735. Both are designed to address massive and underserved markets, NASH and obesity. VK2809 is a liver-selective thyroid hormone receptor beta (THRB) agonist. In the Voyage trial, it not only resolved NASH in a majority of patients, but also reduced liver fat and improved lipid profiles, suggesting potential beyond liver health. VK2735, on the other hand, is Viking's answer to the booming GLP-1 space. Unlike single-pathway drugs, VK2735 activates both GLP-1 and GIP receptors, mimicking hormones that control appetite and insulin regulation. This dual action could translate into better weight loss outcomes with fewer side effects. If other treatments are like single-engine planes, Viking's dual agonists are the twin-engine jets of metabolic therapy, designed for longer range, better performance, and fewer breakdowns. But even the most promising aircraft needs to pass the flight test, and Viking still has some turbulence to navigate. Viking is operating in two of the fastest-growing sectors in biotech. The global obesity market is expected to hit $150 billion by the early 2030s, driven by the rising prevalence of metabolic disorders and increased demand for weight loss therapies. Viking's VK2735 is seen as a serious contender to the current market leaders, Novo Nordisk's Wegovy and Eli Lilly's Zepbound. Meanwhile, the NASH market is similarly massive and still underserved. VK2809 has shown the kind of data that puts it in the spotlight as a potential first-in-class option. If successful, Viking could become one of the few biotechs to offer clinical solutions across both of these billion-dollar verticals. Of course, the competition is fierce. Madrigal Pharmaceuticals secured FDA approval for its NASH treatment Rezdiffra in March 2024, putting it slightly ahead in that race. In obesity, Eli Lilly and Novo Nordisk have set the benchmark, but Viking's dual receptor approach may offer a competitive edge in efficacy and tolerability. What gives Viking an extra boost of confidence is the support from institutional investors. Around 76% of the company's shares are held by institutions, including major players like FMR, Vanguard, and State Street. That level of backing suggests smart money is betting big on Viking's future. Despite the excitement, Viking is still a clinical stage company, and that comes with risk. The success of VK2809 and VK2735 hinges on trial outcomes. Phase 2 results have been strong, but Phase 3 brings bigger patient populations and longer testing periods, which could expose new safety or efficacy issues. Regulatory hurdles also loom large. Positive clinical data is just one piece of the puzzle. Gaining FDA approval and eventually commercializing requires alignment with regulators, potential follow-up studies, and the ability to scale operations quickly. Lastly, Viking's entire valuation is tied to its pipeline. A single trial setback could impact sentiment and derail momentum, as we've seen with other high-profile biotechs. In short, biotech can be brutal. Things change fast, and not always in your favor. VKTX currently has a market cap of about $3.14 billion and trades with a price-to-book ratio around 3.7. Not cheap by traditional metrics, but not unusual for a clinical-stage biotech with strong trial data and takeover buzz. What's interesting is Wall Street's sentiment. The average 12-month price target sits near $90.93, with high-end estimates reaching as much as $125. That's a potential upside of more than 225% from today's level. Even with recent adjustments, like Truist trimming its target from $95 to $75 due to competitive pressures, analysts continue to issue buy ratings. The bullish tone reflects strong confidence in Viking's data and its ability to secure a foothold in two high-growth markets. So is Wall Street overly optimistic or still sleeping on VKTX? That depends on whether Viking can deliver in the next phase of its clinical journey. Viking Therapeutics is definitely on the move, and for good reason. The company is building a compelling story with real science, promising data, and market timing on its side. For high-risk, high-reward investors, VKTX is worth serious consideration. The potential for upside is there, especially if Viking becomes a buyout target or moves closer to regulatory approval. The company's focus on dual-action therapies in both obesity and NASH gives it a unique value proposition, and institutional backing adds a layer of credibility. That said, biotech remains a risky space, and Viking has everything riding on the success of a few critical trials. If you're not comfortable with volatility or binary outcomes, this might be one to watch from a distance, at least until Phase 3 data starts to roll in. Ultimately, whether you buy now comes down to your risk appetite and your confidence in Viking science. So what do you think? Are you bullish on Viking Therapeutics, or do you believe this rally has already gone too far? Drop your thoughts in the comments. I want to hear your take, and I'm always up for a solid debate with the Stocks Telegraph community. And if you found this breakdown helpful, go ahead and smash that like button. It helps the channel grow and gets this video in front of more investors looking for their next big opportunity. Don't forget to share it with a fellow trader. And of course, subscribe for more deep dives, smart takes, and actionable analysis right here on Stocks Telegraph.